Good morning, ma'am.
Last class, what we have studied? Yes, anybody?
Marginal cost, ma'am.
Marginal cost. Ratio after completion of marginal cost, I think I started some ratio analysis, right? Forgotten. I have explained some ratios basically, and then current ratio, how to do it, all these things I told, no?
Yes, yes, ma'am.
Uh, Ratios can be classified into four category, that is current ratio, liquid ratio. This is current based on activity, the liquidity ratio, leverage ratio, activity ratio, profitability ratio, coverage ratio. These are all classifications, right? Under current ratio, sorry, liquidity ratio, under that current ratio, liquid ratio, and absolute liquid ratio, and small problems we have done, I think so. Then efficiency ratio, under that debtors turnover ratio, stock turnover ratio, creditors turnover ratio, then stock to working capital ratio. Then profitability ratios, under that gross profit ratio, operating ratio, net profit ratio, return on capital employed, earnings per share, right? Solvency ratio, under that debt equity ratio, debt ratio, proprietary ratio, interest coverage ratio. Okay. Is two ways of problems are there under ratios. One thing is statement, balance sheet, or profit and loss account informations will be given. You are required to find out what is current ratio, what is liquid ratio, what is debt equity ratio, like that they may ask. This is one pattern. The another pattern, they will give you some ratio of answer will be given. Current ratio this much, working capital this much, debt equity ratio is this much. So you are required to prepare balance sheet or proprietary fund statement, right? So there are two patterns of questions are available, right? So first let us see, the balance sheet are given. You are required to calculate liquid ratio, debt equity ratio, solvency ratio, stock of working capital ratio. Only these ratios are asking, right? So what is liquid ratio? Liquid ratio means liquid assets divided by liquid liability. Either you can take liquid liability or current liability. Okay, liquid asset means what are the thing? Current asset, if you out of current asset, you have to eliminate stock and prepaid expenses. That is called liquid asset. Okay, see here, balance sheet, debtor and cash, only these two are liquid asset. If you add stock, that is totally current asset. Okay, so 3 lakhs divided by, if you take liabilities only creditor, that is liquid liability. If you are taking creditor and overhead, overdraft, that is current liability. Okay, so here 3 lakhs divided by 2 lakhs, either you can take 2 lakhs or 3 lakhs, right? Debt equity ratio. Debt equity ratio means debt capital divided by equity capital. That is a debt capital that includes both current liability and long term liability, debentures, bond, all these things, right? So total outsider liability. So 3 lakhs plus current liability is 3 lakhs, so 6 lakhs. External, that we can call it as external equity or debt capital. right? So internal equity, that is equity capital, that means share capital plus reserves and surplus you have to take, that is 16 lakhs, right? Solvency ratio. Solvency ratio means outsider liability or external equity. Is it sufficient to pay off from your total asset divided by total asset? So outsider liability, that is both debenture as well as current liability you have to take. Totally it is 6 lakhs. Total assets is 22 lakhs. So what is the percentage covers? That is the solvency ratio. Stock of working capital ratio, that is stock divided by working capital means current assets minus current liability, that is the working capital. So stock you have to take either current average stock, opening stock and closing stock. If it is given, you have to take average stock, right? So, average stock, if it is only closing stock is available, you take only closing stock divided by working capital. That means current asset minus current liability is the working capital. Similar way, this problem is also given for calculate current ratio, quick ratio, cash ratio, cash ratio, and net working capital. All these things same. You have to apply the formula and then you have to do it. Okay. See this problem. This one I think I have taken last class. Calculate debtors turnover ratio, average collection period from the following information. Total sales are given 4 lakhs, cash sales given 20 percentage of total sales, debtors on 1/1/2004 40,000, debtors on 31/12/2004 1 lakh 20,000. So that means you are required to calculate debtors turnover ratio and average collection period. What is the formula for debtors turnover ratio? Net credit sales divided by average debtor. Net credit sales means what? You have to take total sales minus sales return minus cash sales. That is called net credit sales. See here, total sales is 4 lakhs less credit sum. Cash sales 20 percentage. You can eliminate it. How much it comes? 80,000. If you are eliminating your credit sales is 3 lakhs 20,000, right? So debtor, average debtor, opening debtor plus closing debtor divided by 2, that is average debtor. Average debtor is 40,000 plus 1 lakh 20,000. So 1 lakh 60,000 divided by 2. So 80,000, right? So 3 lakhs 20,000 divided by 80,000. So that is 4 times. That is this is the debtors turnover ratio. So average collection period. Collection period means what? How many days or how many months once you are collecting money from your creditor, debtor, right? So that means you have to take number of days or number of months in the year divided by debtors turnover ratio. That is called average collection period, right? So here 365 days or 12 months you have to take divided by your debtors turnover ratio is 4 times. That means how many days once you are collecting money? 91 days or 3 months. Okay. This is debtors turnover ratio. Next one, calculate the creditors turnover ratio from the following figures. So creditors turnover ratio formula, what is the formula? Credit purchases, net credit purchases divided by average creditor. So here in the problem informations are given, right? Net credit purchases is given 12 lakhs. Your opening and closing accounts payable, that means creditor plus
হ্যাঁ বলো
payable is called accounts payable.
না
So
না না এই বাবা এক ফুটাও না
4 lakhs plus 2 lakhs divided by 2,
রেখে দাও
3 lakhs. So 12 lakhs divided by 3 lakhs 4 times. Creditors turnover ratio is 4 times. So what is the average payment period? How many days or months once you are paying to your creditor? That means number of days or month, 365 days or 12 months divided by creditor turnover ratio is 4 times. So answer is 91 days or 3 months. Okay. Next one, calculate stock turnover ratio. What is the formula for stock turnover ratio? Net sales or cost of goods. So stock is always shown on cost value. So you take mostly stock turnover ratio. You have to take on cost of goods.
এরকম বলবেন না,
Cost of
এরকম বলবেন
goods
না
sold
বাবা,
is not
এরকম
given
বলতে
in the
নেই,
exam. Who is that?
এরকম বলতে নেই, এরকম বলতে নেই।
Uh, Mute your mic. Mute your mic.
মানে মার প্রতি যত্ন নাও।
Hello. Don't you listen? Mute your mic, disturbing the other classes. Somebody is
எத்தனை வெளியே இருக்கிறோம்
yes. The next one, credit stock turnover ratio. Stock turnover ratio. Sorry, this one. Stock turnover ratio. What is the formula? Cost of goods sold, or if it is cost of goods sold is not given, you take sales value also divided by average inventory. Right? See here, opening stock, closing stock, wages, sales, purchases, carriage inverse. All these things are given. Right? So what is the cost of goods sold means what? Total sales minus gross profit is the cost of goods sold, right? So here sales is not given. Sales is given 80,000. What is your, if you are taking sales means 80,000 you can take, or if you are taking cost of goods sold, that means opening stock, average stock is opening stock plus closing stock divided by 2, so 20,000 4 times. So if you are taking sales, if gross profit is given, sales minus gross profit is cost of goods sold. So here gross profit is not given. You can find out gross profit if you are putting T form. Trading account you are putting, no? So debit side, opening stock is 18,000. See here, this slide. Opening stock 18,000 plus purchases 46,000 plus carriage inverts 4,000. These are all comes under debit side, right? Credit side, sales 80,000 minus closing stock 22,000. Here you have to add wages also, wages. So how much comes if you add, what is cost of goods sold? 18,000 plus 46,000 plus 14,000 plus 4,000. How much comes?
92
92. This side 1 lakh 2,000. Right? What is your gross profit? 10,000.
10,000
Okay. So now cost of goods sold means sales minus gross profit 10,000. If you are eliminating, you can write cost of goods sold divided by average stock. So 70,000 divided by 20,000. You may actually we have to take cost of goods sold divided by average inventory, right? So average gross profit is not given in your, is not available in your problem. You have to calculate. There are informations are available: opening stock, wages, closing stock, sales, purchases, carriage inverse. If you prepare trading account, you can find gross profit. If you are eliminating gross profit from sales, that is called uh, cost of goods sold. Okay. See next
Ma'am, in
one.
exam, for example, we know the formula. We have by hearted the formula and we are writing the answer sheet. But we
Yes.
don't know how to pick up the figures, like how to calculate debit side or credit side or correctly. So will we get marks on that?
Definitely, you will get a step mark. Say for an example, this cost of goods sold. If you are forgetting to add something wages or purchase something, if you are forgetting one item, your answer will be wrong. But you will get the mark for formula, and then what are the things you have done. That step mark you will get it. Okay, don't worry.
And ma'am, this kind of questions will come for how many marks?
These are all part A they may ask. The big if it is in a big one, solutions will be given big, that is 4 5 category. If they are asking, sometimes they may give in part B, sometimes even part C also they may give. Part C, that is all missing informations will be given. You are required to prepare balance sheet, you are required to prepare proprietary fund statement, like that. If they ask, they may ask in case study also, right? So you should be very thorough. Mostly these ratios will be given for some theory question also, and part B and part A they may ask small questions. So you have to be prepared thoroughly, all ready to be right for anything. Okay.
Okay, ma'am. And
Then
ma'am, for also all the questions to produce these ledger not
uh,
profit and loss or balance sheet you have to make.
yes, you can make balance sheet. See here, these are the problems are given like that. Okay, they have given information, balance sheet given. You are required to calculate total turnover ratio, fixed assets turnover ratio, like that. If they ask ratios, you have to, if you have to know the formula, then you have to do that, right? Some problems, see here, this kind of problem will be given for case study or part B, 8 marks question, big question they may ask. Very carefully you have to do, then only you have to prepare balance sheet, right? Let us do this problem, you can understand. See here, working capital is given 2,40,000, bank overdraft 40,000, fixed assets to proprietary fund ratio 0.75, reserves and surplus 1,60,000, current ratio 2.5, liquid ratio 1.5. Only these are the informations are available. See here, what you have to prepare, required to prepare a summarized balance sheet as at 31/3/2018. Okay. So now, what are the information available? Within the information available information, you have to prepare, find out one from one another, right? See here, we have clue. Current ratio is given 2.5 times. Working capital is given 2,40,000. That is the clue. You can find out what is current asset, what is current liability, right? So what is working capital? Working capital means current assets minus current liability, right? So what is the formula for current ratio? Current assets divided by current liability. That means what? If you have one time of current liability, if you have current asset 2.5 times, that is sufficient to pay off your one time of current liability. That means 2.5 times of current asset minus one time of current liability is equal to working capital. That means current asset minus current liability, right? So 1.5 time, 2.5 minus 1, that means 1.5 times is equal to working capital 2,40,000. What for one? If you are substituting this one, current liability, you can get it 2,40,000 divided by 1.5, that is 1,60,000. One time means that is current liability. Current liability is 1,60,000. What is current asset? 1,60,000 into 2.5 times, right? So current asset is 4 lakhs. 1,60,000 into 2.5 times 4 lakhs. Current asset is 4 lakhs. Current liability is 1,60,000. There is another clue is also given, liquid ratio. Liquid ratio here 1.5 times. So let us assume liquid asset divided by current liability, right? So here the difference between current ratio and liquid ratio only stop. right? So one time is equal to 1.5 times is how much? One time is 1,60,000. 1.5 time means that is
240.
240.
240.
2,40,000 is what? Liquid asset. So 4 lakhs
Yeah.
minus 2,40,000. What is the difference? What is the stock value?
160.
uh,
160.
1,60,000 is your stock value. See here, 1,60,000 is your stock value. You can either do like this, or you can, if you here bank overdraft is there. Bank overdraft, if you are treating in the formula current liability, sorry, liquid asset divided by liquid liability, if you have treated like that, you will get different answer. Okay, even that is also correct only. It is nothing wrong in that. You can do it. You can take either current liability or liquid liability. Whatever it is, it's no problem, right? Okay. See here, next one. Uh, Fixed, next one, see here, what is the informations are available? Only fixed assets to proprietary fund ratio is available. Debt equity, sorry, fixed assets to proprietary fund ratio is there, 0.75 times. So now what is the formula for fixed assets to proprietary? Fixed assets divided by proprietary fund is equal to 0.75. Either if you know fixed assets value or proprietary fund value, any one value easily we can find out. So both the values we do not know. So only the answer is given. There is no other clue is available in this information, right? So what we can do, we can use accounting equation. What is your accounting equation? What is accounting equation? What is the accounting equation? Tell me. What is your double entry system?
Asset equal to capital plus liquidity.
Very good.
Liability.
Liabilities, capitals, and capital plus liability is equivalent to total asset, right? All the debit aspect is having equal and corresponding credit aspect. All the credit aspect is having equal and corresponding debit aspect. That you have to keep it in your mind. Accounting equation means liability side, capital plus liabilities are equivalent to your total asset. That is the accounting equation. Okay. So now let us use this accounting equation for finding the values, right? See here, shareholder liability side, what are the things will come? Shareholders fund, that means capital plus reserves and surplus, that is called shareholders fund, or we can call it as proprietary fund. Proprietary fund, shareholders fund, that means capital plus reserves and surplus, plus current long term liability. Long term liability, we are assuming that zero, right? Plus current liability is equal to fixed this side, total asset means fixed asset plus current asset, right? So here current asset we know, current liability we know, shareholders fund we do not know, fixed assets we do not know. So let us take shareholders fund is, let us take it as X. Okay, this fixed asset is what is given 0.75 fixed assets to proprietary fund ratio. So proprietary fund ratio fixed assets are covered 0.75 times, right? So 0.75x fixed asset is 0.7. That means proprietary fund, if you have 1 rupee, 75 rupee is the your fixed asset, right? So x 0.75x. Let us say take this equation. 1x proprietary fund. Let us take x plus current asset is, sorry, current liability is 1,60,000 is equal to fixed asset is 0.75x plus current asset is 4 lakhs, right? So now you substitute this equation. 1x, bring this 0.75x into one side. So 1x minus 0.75x, so 4 lakhs. If you are bringing this equal to this side, become minus. So 4 lakhs minus 1,60,000, that means 2,40,000. So 0.25x is 2,40,000 bought for 1x. So 2,40,000 divided by 0.25. So x is equal to 9,60,000. What is x? Shareholder fund. Shareholder fund is 9,60,000. What is fixed asset? 9,60,000 into 0.75. 0.75x. Okay. So fixed asset is 7,20,000. So now we know all the informations. Let us prepare balance sheet. Shareholder fund, that means share capital. See your problem. Reserves and surplus is given 1,60,000 reserves and surplus. So 9,60,000 is your shareholders fund. Minus reserves and surplus 1,60,000. What is your capital? Capital will be 8 lakhs. So share capital 8 lakhs plus resource and surplus 1,60,000. So total shareholder fund is 9,60,000. Current liability, under that bank overdraft is given 40,000. So total current liability we have calculated 1,60,000. So 40,000 is bank overdraft. Remaining other current liability is 1,20,000. Fixed assets on 7,20,000 we have calculated. Current asset totally it is 4 lakhs. You have to show separately what is the stock value. We have calculated 1,60,000 stock value. Current asset, the other current asset you have to write 2,40,000. So total current asset is 4 lakhs. So now we have to make the total of balance sheet liability side and asset side. Okay. Do you understand this? How to prepare?
Yes, ma'am, understood, but yeah,
Mm.
complicated and will take a lot of time to process.
Yes, it will take a lot of time. One problem into another problem, different informations will be, some information will be available more, or they may ask you in different way. So you have to find out what is information is available. You have to track that. You have to take one from another, right? So you have to find out all the values, asset side values, and then liability side values. After that only you can prepare balance sheet or proprietary fund statement. See here, another problem I have given here. Paid up capital, plant and machinery, sales, gross profit, annual credit sales, turnover ratio, fixed assets turnover ratio, sales return. So these are the informations are available. Within this information, you have to bring it from one another, right? See here, I have calculated all these things. You practice it. Then tomorrow, if we have, let us complete the syllabus. If we have time, we will do some important problems. These things you, because one chapter I can do one specimen, right? So you practice it many problems. It will be different from one another. You practice it. Okay. Can we go for next one? Right. Next chapter. Let us go. Next unit, cost sheet. Right. Now we have completed 4 units. First unit, you have basic accounting concepts, conventions, journal ledger, trial balance, then preparation of final accounts, and then some theory part. Then set unit 2 we have studied depreciation and ratio analysis. Unit 3 marginal fund flow and cash flow analysis. Unit 4 marginal costing, and then unit 5 cost accounting, and you have variance, standard costing or variance analysis, right? So let us do cost accounting. See, what is cost accounting? Cost accounting means what? We have already, what are the accounting we have studied here? What are the accounting we have studied? Financial accounting and management accounting, right? What is financial accounting? What is management accounting? Generally, you tell. Anybody?
Financial accounting is basically what we are doing in day-to-day basis.
That is historical information. Our financial
Yeah.
accounting is based on historical information, which is what are the transactions occurred in your business that you are recording in the books of accounts and preparing final statements. That's over. That is financial
Yeah.
accounting, right? So
And
management accounting, which helps you to take various decision making, you are interpreting the final statements. It is also based upon your financial accounting, but you are interpreting by using various techniques, tools. That is, ratio analysis is you can use take it as a tool. Marginal costing is a technique. So some ways and means you are using and interpreting the statements for taking various decision making. That is called management accounting, right? So what is cost accounting?
Accounting for cost and recording the cost as records.
So you have once you are producing the goods, you have to ascertain the cost. Ascertain means what? You have to fix the price. How you are determining your price of your product? So what is the cost incurred for producing that product? That first of all you should ascertain, isn't it? Once ascertainment of all this cost, what is incurred for your production, that then only you can fix the selling price, isn't it? So that is why the all the what you are going to study in cost accounting, it is the elaborate one, but here three accounts we are combined into one accounting for manager. So elaborately we cannot go all the chapters in cost accounting. We are going to study only the basic elements. What are the expenditure you are incurring, then how to prepare cost sheet, and then standard costing. Only these two things you are going to study under cost accounting. Cost accounting, there are various things are there. Job costing, services costing, so many methods, so process costing, so many things are there that we are not going to. Only BCom students you might have studied individually in BCom while studying BCom, right? So that things are not required as a basic fundamental thing, which is required essential for manager. That is why the cost sheet and variance analysis we have included in this syllabus, right? See here, what is cost accounting? Cost accounting is the application of accounting and costing principles, methods, and techniques in the ascertainment of cost and the analysis of saving or excess cost incurred as compared with the previous experience or with the standards. So when you are recording what are the expenditure incurred for production, when you are ascertaining the cost what is incurred, then you can compare with the actual with the standard. What you have standard norms fixed, you can find out what is the deviation, what is the variation between actual and standard norms. So that helps you as a what tool? Helps the management as a controlling tool or controlling technique. If you have no records of maintaining what is the expenditure you are incurred for producing the product, so what will happen? Your expenditure will go like anything. If there is any system is there, then only the cost will be controlled, right? So this ascertainment of cost is not only for ascertaining, but also it is using as tool of controlling technique, right? So see here, what are the elements of cost is that basically whatever be the production, if you are making, whatever be the goods, you have to incur three basic expenditure. So what are they? Material, labor, and overheads, right? So material, what it may be a direct material and indirect material. Direct material and labor is also those who are under directly producing the product per unit. How much wages per unit if you are paying, that is direct labor. Indirect labor, that is supervision salary, manager salary, these are all indirect labor. Okay, then overheads is also for directly what you expenditure you are say for an example, power, power consumption for 1 unit of producing output, how much you have to incur. So that kind of direct expenditure is there. Indirect expenditure is different, right? So you have to classify elements of cost: material, labor, and overheads, right? So material under that direct labor, direct material, indirect material, labor also, both direct, indirect. So these indirect material, indirect labor, and indirect expenditure comes under the heads of production overhead, administration overhead, sales overhead, and distribution overhead. In the factory, if you are doing fuel and other expenditures, supervisor salary, foreman salary, so these are all comes under production, the material related to material, that is flavor. If you are doing any flavor, adding that indirect material and indirect labor, indirect overheads comes under production overhead. Administration overhead, you have to pay stationary expenditure, manager salary, the telephone charges, taxation paid, rent rate, all these things comes under general category. In office, what are the expenditure you are making, that comes under administrative overheads. Sales overheads, salesman commission, then advertisement, sales related activity. If you are doing any expenditure, that comes under sales overheads. Distribution overheads, that is you have to give warehouse rent, and then your carriage outwards, then display expenditure you are doing. So these comes under distribution overheads, right? Selling and distribution on and the you can club into one, right? See here, I have explained what are the expenditures comes under these things. You go through that. Then let us see. We have to prepare cost sheet. How you are preparing financial statement, that is trading profit and loss account in financial accounting, like that. In cost accounting, we have to prepare cost sheet, statement of cost, for finding the ascertaining of cost of production, right? So what are the expenditure you have to include, what are the expenditure, the financial expenditure you have to exclude. What is, I have given it here, specimen format is given. First you have to take what is the direct material you have consumed for the production, that is material, direct labor, direct overheads. If you add these three things, is called prime cost. What is prime cost? Direct material, direct labor, direct overheads, which is used for the production during the year or during the month, that is called prime cost. Prime cost plus factory expenditure, that is called works cost. Works cost plus office or administrative expenditure, that is called cost of production. Cost of production plus selling and distribution overheads, that is called cost of sales. Cost of sales plus if you add some profit, that some percentage of profit, that is sales. Okay, so when you are taking direct material, sometimes opening stock of raw material will be given and purchases of raw material will be given. So you have to find out what is the direct material which is consumed for the production, that how to calculate opening stock of raw material plus purchases of raw material during the year. If you have spent for any expenditure, carriage inwards. So when you are bringing raw material into your factory, you are paying some wages, right? That is called carriage inwards. So that is, you have to add with the purchases plus opening stock of raw material plus purchases of raw material plus carriage inwards, you add it, less closing stock of raw material. That is called cost of material consumed or used for the production, or direct material. In your problem, direct material, if it is given, you take, no, don't take, don't deduct opening stock, all these things. Direct material means material which is consumed for the production. Okay, then add direct labor and direct expenditure. If you add all these three things, that is called prime cost. Do you understand? Prime cost plus factory overheads, if you are adding, that is called works cost. Works cost plus administration expenditure, if you are adding, that is called cost of production. Then cost of production plus selling and distribution overheads is called cost of sales. So what are the financial nature of expenditure you have to exclude while preparing the statement? While preparing the cost sheet, you have to take only the actual expenditure which is incurred for the production, right? So some expenditure may be non-cash expenditure and non-trading expenditure, you have to eliminate it. That's some financial nature. Say for an example, cash discount. Cash discount means what? At the time of purchasing 10,000 worth of goods, they are giving you 9,000. That is called cash discount. 9,000 you are entering into the books of account. So 1,000 rupees, it is you can avoid it to write in the books of account cost sheet, right? Then interest paid, this is financial expenditure. Preliminary expenses, goodwill written off, bad debts written off, provision for taxation, provision for bad debts, transferring to Federal Reserve, donations, income tax paid, dividend paid. These are all the expenditures which are financial nature and non-cash and non-trading expenditures. You have to eliminate it. But only one thing you have to keep it in your mind: depreciation. Depreciation, even though it is a non-cash expenditure, but in cost sheet we have to show. Why? Because the machinery, when we are utilizing, that depreciate, the asset will depreciate, so we are treating it as an expenditure. So we have to show in the only depreciation, you have to take it in the preparation of the factory cost. Factory cost, you have to add depreciation in the cost sheet. The other items financial nature you should not take. Okay, let us do one problem, you can understand. See this is the problem is given in your problem. Number of jeans manufactured during the month 1000 units, and then direct material consumed is given. That means consumed for the production. Direct material is given, direct labor, indirect labor, supervision cost, factory premises, all these informations are given. A profit margin of 20% on the total cost of goods is expected on the sale of jeans, right? Let us prepare two columns, per unit column and total amount column, right? So see here, direct material, how much is given? 1000 units are given. So 1000 units, what is the sales price? Sale price you have to find out, that we have to find out, right? Let us do it later on. Direct material, it is given 20,000. Direct labor 8,000. So total direct prime cost, direct material, direct overheads are not given. Direct expenditure is not given. So only direct material and labor. So prime cost is 28,000. Number of unit 1000 units. So 28,000 divided by 1000 units. 1 unit is equal to 28 rupees. Per unit column also you maintain it. Okay. Then factory or works or factory overheads. Factory overheads, what are they? See here, indirect labor, supervision cost in factory. The only you take only in factory, right? Factory premises rent, then factory lighting, oil for machinery, that you have to take it in factory. Depreciation on machinery, that you have to take it here, right? Depreciation on machinery is treated as an expenditure. So all the factory expenditure, prime cost plus factory expenditure, if you are adding, that is called works cost, right? So works cost is 34,300 divided by 1,000 units. So per unit, how much you have to do it, right? 34.30. Then office and administrative overhead, what are they? See here, office overhead, office salary, and then miscellaneous office expenditure. Only these expenditure, if you are adding works cost plus office expenditure, is called cost of production. Cost of production plus selling and distribution overheads, that is called cost of sales, right? So cost of sales is 51,300. Now we have to find out sales. Before finding the sales, one clue is given. A profit margin 20% on the total cost of goods is expected on the sale of jean. So that means what? 20% on total cost of goods sold. So cost of goods sold is how much? 51,300 into 20%. How much it is? So 10,260, right? You add it. So total sales value is 61,560. This is the sales value divided by 1,000 jeans. Per unit jean value, jean cost is 61.556. 61 rupee 56 paise. So this is the method you have to find out, right? Sometimes this profit margin here, profit margin 20% on cost of goods is sold is given. Instead, 20% on, say for an example, here 25% on, instead of cost of goods, it is given on sales. Right? A profit margin of 25% on the sales is expected to the gin it is given. Sales value we do not know. Only the profit is given on sales. So how to find out profit? So in that case, you have to take, see here, I have given here, if 25% is given on your sales, that means what is on your profit on cost? So what is the profit is given in your problem? That is 25 divided by 100 minus 25. That means 100 minus 25 means here 25, 75. Right? So that means 1/3 or 33.33%. Okay, on cost. So 25% on sales means on cost will be 33.33%. Or here 20% on say 20% on sales if it is given. So what is the profit on cost? Profit percentage on cost is, see here,
25%, ma'am.
20 by 100 minus 20. So that means 80%.
Cost will be 80 and profit percentage will be 25%.
25%. Profit on cost will be 25%. Okay, on cost, 25% on cost.
1/5 on sales is equal to 1/4 on
1/4 on
sales.
Yes.
Yeah.
On cost.
Yeah, ma'am.
And suppose indirectly if it is given, you have to calculate like this. Some problem will be given like that. You should be read very carefully. Profit percentage, whether is it given on cost of sales or sales?
Or sales, yes.
You should be very careful. If it is given on cost of sales, no problem. We know cost.
Yes.
Cost into what is
without
the
profitability
divided by 100, we can calculate directly. Suppose on sales, if it is given, you have to take it
include
cost. Yes, that you have to derive.
Thank you.
And then you have to find out. Okay, this is
Yes,
for your information, additional information. Okay.
Thank you.
Okay, let us do one more problem. See here in this problem, there are some work in progress, opening stock, not only in the raw materials, but also work in progress also, and then finished goods also you have opening and closing is there. So in that case, how to prepare cost sheet? See here, opening stock of raw material plus purchases plus expenditure on purchases, that means carriage inwards, minus closing stock of raw materials, that is called materials consumed or direct material used for production, plus direct wages, direct overheads. If it is not given, you take only these two, that is called prime cost. Okay, prime cost plus what you have to take, factory overheads, right? So in that case, work in progress means what? In factory, some goods may be semi-finished, Semi-finished means 50% material, maybe it is undergoing, no, ongoing. So 50% material or 75% labor work is going on. So if opening stock and closing stock, if it is there, that you have to add with it, that is prime cost plus opening work in progress plus factory overheads minus closing work in progress, that is called works cost. While doing works cost, the work in progress, opening you have to add, closing work in progress you have to deduct along with the factory cost. Do you understand? So opening and closing work in progress, if it is given, you have to adjust in the factory overheads. Okay. So prime cost plus opening work in progress plus factory cost minus closing work in progress, that is called work cost, right? So works cost plus office and administrative overhead, that is called cost of production. So after finding the cost of production, you have to adjust finished goods. Finished goods opening and closing is there. See here, opening stock of finished goods, first opening is 54,000, closing 31,000 is there. So cost of goods sold, sorry, cost of production plus opening stock of finished goods minus closing stock of finished goods, if you are adjusting, that is called cost of goods sold. Cost of goods sold plus selling and distribution overheads, that is called cost of sales. Do you understand? So prime cost, while doing prime cost, if you have opening and closing raw material, you have to adjust for finding direct material or material used for production, right? So opening and closing work in progress, if it is given, that you have to adjust in the factory overhead. Prime cost plus opening work in progress plus factory cost minus closing work in progress, that is called factory works cost. So works cost plus office and administration overhead, that is called cost of production. After finding the cost of production, you have to adjust opening and closing working, finished goods. Opening stock and closing stock of finished goods, if you are adjusting, that is called cost of goods sold. Cost of production plus opening stock of finished goods minus closing stock of finished goods, that is called cost of goods sold. Cost of goods sold plus selling and distribution overhead, that is called cost of sales. You add some profit, that is called sales. Do you understand this problem? Right?
Ma'am, on this advertising carriage outward, so if, for example, your production of unit, say 1000, was supposed to happen where you have already produced like 700 units, but then advertising cost will also should reduce, no, in the same time.
No, what is available information we are doing, that's all. Why you are worrying about what is total advertising? Don't try. Advertisement is a deferred revenue expenditure. Usually you will do in bulk, 2 crore, 3 crore, like that, right? So every year what we do in financial accounting, we used to shown in the asset side as a deferred revenue expenditure. Every year we are eliminating that expenditure. That benefits maybe go for 10 years, right? So if you have done 1 crore rupee expenditure for advertisement, 10 year means per year 10 lakhs you are writing off. 1 year advertisement expenditure you are treating 10 lakhs. So that 10 lakhs you have to write off in the profit and loss account debit side. So profit and loss account, you are writing advertisement expenditure written off 10 lakhs. So if, every year your asset side value 1 crore you might have shown as a deferred revenue expenditure, 10 lakhs it will reduce, right? So that is the nature of advertisement expenditure. So here what is given, here don't think that much. What is given, you take it in the selling and distribution expenditure. Okay.
Okay, ma'am.
Okay, that's all with regards to this cost sheet. You practice some more problems. Cost sheet is very simple and easy calculation. Sometimes a case study also they may give this type of problem. Case study they may give. Sometimes part A they will give you some small part, opening stock, closing stock, find out what is the prime cost, what is the finished goods cost, like that. Some partially they may also ask, or sometimes they may ask you to prepare like this statement. Okay. So tomorrow we will do standard costing and variance analysis. Standard costing and variance analysis, we can use it as a technique or tool in both management accounting as well as cost accounting. There are variance analysis are there, many analysis are there: material, labor, then overheads fixed as well as variable cost, then sales variances. But according to your syllabus, we have taken only material and labor. Okay. So formulas and all I have given here. You go through these formulas. Tomorrow we will do some problems in material variances and labor variances. After preparing all these things, whatever doubts you note it down today, you practice it, whatever be the problem. Tomorrow will be the final class. Then I will tomorrow, after finishing this material variances and labor variances, we will discuss whatever doubts you have. Okay. I think time over. We can conclude the class.
Ma'am, can we have the PPT now?
PPT is available in your website, DD website.
Ma'am, we have searched, but it was for 22 only.
Same PPT only. Accounts, there is no changes. Same thing only. The same
Okay, ma'am. Thank
PPT
you.
I have uploaded in there. You can take it. Okay.
Okay, ma'am. Thank you.
Okay. Thank you. You practice it. It is in your hand. You have to practice, right? Okay.
Ma'am, what is the average ratio of students passing an account subject?
Many of them are getting pass. Only few of them, those who didn't come from account background, you have to go some private tuition like that. Then only you can do the problem. Even though some of them will get managed. Some theory questions also they are writing and they are applying. Actually, it is a very good scoring paper. You can get 100 out of 100 if your answer is correct. 20 marks question, I will give you 20 marks. 10 marks question, correct answer is correct, 10 marks I will give you. Theory paper will be reduced. 10 marks question, they will give you only 5, 6 marks, 7 marks. If you have very extraordinarily, if you have written only 8 marks, we will give. Even though 2 marks we will reduce. But problem paper, you can get full mark. So you try to practice it, get good, score good marks. Okay. Don't worry about it. Your effort is very important, right? You have to practice it, many problems, then only you can do it very successfully. Okay.
Madam, where can we get this PPT?
It is available. Say, I show you where it is.